Good morning, everyone. Eric Wilson with iSell Health. Welcome to day 3 of our insurance training. It's September, so September is known as Life Insurance Awareness Month. So we're going to spend the next couple of days talking about life insurance. Today we're going to talk about term life. We're also going to talk about, in the coming days, whole life, universal life, which is one of my favorites. And then, of course, we're going to talk a little bit about final expense, which is more of a senior product, but we'll talk about that because there's a place for that during Life Insurance Awareness Month. Now, term life. It's called term life because you have your insurance for a specific term, whether it be a 10-year term or a 20-year term or a 30-year term. That is the term that the rate is guaranteed for. The younger you are when you buy it, the lower the premium, and it's locked in for 30 years or 20 years or whatever you do. My general rule of thumb is you want enough life insurance until your kids are out of the house at age 25. So I use age 25 as my benchmark. So if your kids are 5, your youngest child's 5, you need probably a 20-year term. If he's 15, you might be looking at 10. If he's not born yet, it's just still in the planning stages, maybe 30 is the best way to go. Or maybe you use 30 to cover a 30-year mortgage. There's various strategies there, but that's a couple of them. Right? Again, you can never buy life insurance cheaper than you can right now. The younger you are, the cheaper it is. So, your next birthday, you will be a year older. And actually, they round it to your nearest age. So, at 6 months and 1 day beyond your birthday, you are a year older. So that's just something to think about. Now, I have this really nice iPad app. I'm going to show it to you. You really can't see it so well here. Everybody sees this light calculator there. And when I meet with a client, and you can download it yourself if you have an iPad or an iPhone right off the App Store, but it tells you how much life insurance you need. It starts off with your debt, some needs a death, lump sum. You have your final expense insurance, which is your cost of your funeral or if you're being cremated. I use $15,000 for this topic because I figure that's about the price of a full funeral. If you're going to that meaning burial and church service and all those kind of things, flowers, the whole 9 yards. If you're going to be cremated, the cost is significantly less, maybe $10,000 less. For purposes of this discussion, I assume we're all debt free, meaning no car payments, no nothing like that, no credit card debt. We're all debt free. I assumed a $100,000 mortgage just because it was simple and easy math. College funding. I used my 2 kids, ages 11 and 8, as the idea. I also assumed one was going to go to private college, one was going to go to public university. That way, try to get a good blend mix. Annual income needs. I figured if something were to happen to me, and actually a lot of people, you need about $75,000 to. If you go from 2 incomes down to 1, you need at least $75,000 annually to make up for the loss. Also figured 20 years of income. My wife is, I believe, 38, so 58. I probably should use 25 in actuality, but I use 20. So there were the things there. Also said, savings account. I just assume people have $10,000 in their savings account or liquid cash. I'm sure that's high for a lot of people. Maybe it's low for some. And I also figured 401ks and current retirement plans. You have about $150,000. Also, for purpose of this discussion, assume someone already had $250,000 worth of life insurance. Okay? And then they came back with a total additional needed of, so you can see it there, $567,000 and $711.84. That's what you needed. So this person is still $567,000 short in life insurance with $250,000 already. So they need about almost $800,000 in life insurance if they were to pass away. So while all of us think we have enough, if you have $250,000, that's great. That's a good start. It may not be enough, especially if you have young children and a mortgage and those kind of things. Be happy to answer any of your questions. You can also visit online at www.isellhealth.com. Thanks for watching this video, and we'll talk again later in the week on whole life and universal life and final expense. Thank you.